Good evening, everyone. I, Praveen Kumar, partner DPMC. Welcome all of you in today's webinar organized by DPMC. I hope and pray that all of you and your dear ones are keeping well and safe. Our topic for today's webinar is business risk management, financial reporting, and sustainability. I am confident that you will find this webinar informative, interactive, and interesting. There will be 3 technical sessions which will be moderated by our joint managing partner, Mr. Dhruv Chopra. Dhruv has vast experience of more than 15 years and he is currently heading corporate finance, transaction advisory, and risk consulting practices of the firm. He is an FCA and he has done Masters in Finance from Manchester Business School, UK. He is also a member of various committees of reputed Chamber of Commerce, including SHM and PhD. His focus areas of practice include assurance services, risk advisory, transaction advisory, M&A, tax and regulatory aspects. Now I hand over to Mr. Dhruv Chopra to take it forward from here. Thank you.
Thank you, Praveen. Welcome everyone to our webinar series at Devanvi and Chopra and Company. Our topic for today is impact on financial reporting and sustainability. Thank you for taking our time on a Monday evening and listening to us. On a lighter note, recently a young man asked a wise man, how do I become a millionaire after the time in COVID? And the wise man looked at the young man, smiled and said, well, you should have been a billionaire before COVID to be a millionaire after COVID. And that in essence captures the sentiment and the mood in the market. But luck favors the brave. All of us, including yourselves, more importantly, I'm sure, are burning the midnight oil, trying to find your way around this catastrophe that we all face together. This catastrophe is unprecedented. It's unprecedented in 100 years. It's a black swan event, but it's far greater as compared to maybe SARS or H1N1, or even if you go back to Spanish flu in 1918 or the Great Depression in 1932. And that is because of its impact simultaneously across the globe, its impact across sectors, and its impact across people. I think what is important to know is that this is not an economic crisis first, it's a health crisis first, because of which there's an economic crisis. And the issue with the health crisis today is that we don't have a permanent solution. Sure, there are many companies in the US, in Germany, in India, Oxford with Serum, who claim that there is a potential vaccine that would be available in the next few months, maybe 6 to 8 months. But let's say 12 to 18 months from now is when we'll have some permanent solution. Till then, we have to learn how to survive, stay safe, and not let the economy crash. From an India perspective, the objective was clear. We had to save lives, we had to save livelihoods. And from a lives perspective, we've done well. The latest reports have shown that the curve is starting to flatten, the new cases have reduced, and by May 16th, the number of additional cases will reduce substantially. But what we really need to focus on in a country such as ours is livelihood, where 22% of the people are living below poverty line, 20% of the people have daily wages, and in absence of stimulus to the economy, those livelihoods will be lost, and essentially lives will be lost. India, for now, has not gone all throttle on the stimulus. And if you look at the chart on the right, one can see how India, as a percentage of GDP, is far below most other nations who have gone to the extent of 33% of their GDP as stimulus. Having said that, India this morning did infuse 50,000 crores from RBI as additional stimulus to support mutual funds. Having said that, and in the need of saving livelihood, we have some leverage points which are positive. Oil is at an all-time low, which will give the country a $45 billion saving. Inflation is pegged at 3.8 to 4% as per the last RBI governor's speech, which gives us fiscal cushion. We've got 2.5 times the food that we need to support the minimum food requirements of the country on the back of a good Kharif and Rabi season and a good monsoon up ahead. We've got strong domestic story still, high savings, low credit, high consumption, domestic consumption driven, high liquidity at 7 lakh crores, and very good international relationships, both in the Middle East, Europe, and the US. So on the back of that, we have to take quick decisions. We have to act now. We have to prepare for the near term and build for the long term. In this light of unpredictability and uncertainty, Howard Marks said that Howard Marks manages Oak Tree Capital, and which manages $125 billion of cash across the globe. He said, for the first time in history, it's impossible to know what the future holds, and there is no precedent or benchmark in the past. So decisions become that much more difficult. For CFOs and financial controllers such as yourself, it is those decisions that need to be taken. And what we've tried to do today is highlight 3 aspects of what you would be facing post-COVID or post-removal of lockdown, and try to emphasize on how one can work together to take better decisions in this time of uncertainty. So our first topic is issues on financial reporting. This topic will be taken by my colleague, Mr. Sandeep Bhaiya. Sandeep is our partner at the assurance division with 15 years more of post-qual experience. Sandeep has had extensive exposure to statutory audits of PSUs, listed companies, unlisted companies, domestic companies, companies with global presence, and has faced numerous issues in the past, even while auditing at the time of the great financial crisis, and has been tracking very closely what's happening on the financial reporting side in India since the COVID lockdown. The issues he would largely highlight would revolve around helping you find transparency and clarity in your reporting, staying compliant, and projecting a true and fair view of your financial position for all your stakeholders and your readers of your annual reports. The topics that we would, or the points we would touch upon could include today, inventory valuation. It will become complicated as there is more obsolete inventory, slow moving inventory. Maybe the value of inventory from a net realizable value perspective goes down. There would be issues on contingencies and provisions with disputes pertaining to leases. It could be pertaining to contracts, vendors, customers. And there could be issues around impairment of assets. Impairment of asset is an aspect that has to be considered on an annual basis. It's not about permanent diminution anymore. It could be just a diminution temporarily for now, and as on financial reporting date, and needs to be considered and has an impact on your profit and loss account. Borrowing costs, deferred tax asset and liabilities, and other accounting policies and reporting mechanisms. So I would hand over to Sandeep, and he can please take this forward. Thank you.
Thank you, Dhruv. So, good evening, everyone. So, the management is always expected to satisfactorily close down the issue related to the financial statement and then get them signed on the time. But this time, first time in the in our history. So for year 2020 and for the upcoming years, the financial statement doesn't appear like the T20, which is the easiest one, easiest inning. But this time it appears to be like the test match of the cricket. So it's going to be a long inning. So with this remark, I would like to proceed on my technical topic related to issue pertaining to financial reporting. So I will highlight aspect of few important accounting standard and Indian accounting standard areas which may pertaining to our financial instrument, borrowing cost, inventories, leases, revenue recognition, impairment of assets, deferred taxes, etc. So these are some of the important aspects which I would like to highlight. However, as per ICI advisory issued in March 2020, there are around 15 accounting standard, Indian accounting standard areas which may have impact on, which may have COVID-19 impact, and that need to be considered for the financial statement. But as of now, because of the paucity of the time, we are just covering on the important ones and with highlighted with certain highlights. So first of all, why we need to assess the COVID-19 impact on financial reporting, and what is the issue the company will face while reporting their financial statement because of COVID-19. So in this pandemic, the following concern may arise to the companies, and then we will proceed for the areas which may impact our financial statement, and we need to do the suitable disclosures. So there may be significant decline in the value of the financial instrument. There may be erosion of the financial position of the entities. There may be decline in the selling price of the goods. There may be reduced movement of the inventories. There may be valuation issues of my asset and liabilities. And on the financial performance side, on the income part, so because of cancellation of my order, my top line may hit. And on the expense part, because there may be provisions for doubtful debts on account of my trade receivable, there may be impairment losses on my fixed asset and my other investment, there may be diminution in valuation of my inventory. So because of all these extraordinary event is going to happen because of this pandemic, so my expense part may go higher this side this time because of COVID-19. And beyond all this, so we also need to identify the impact whether these item is going to be treated as ordinary item or extraordinary item in my financial statement. So keeping in mind all these concerns, it is important to have an understanding of the impact of COVID-19 on my financial statement or financial reporting. So with this, I would like to proceed further. So first of all, what is the objective of COVID-19 impact on the financial reporting? So there are three objectives, broader objective: transparency, compliant with regulations, true and fair view. So first is about transparency. So because of COVID-19, now the business may hit and certain business need to be shut down. There may be certain uncertainties about the future of the business. So while going for the financial reporting and presenting our financial statement, we need to assess, is there any concern related to my going concern in the future? And if it is so, based on our assessment and judgment as of now, keeping in view the market condition and market scenario, we need to disclose this aspect whether my going concern is going to hit or not. And if it is not, then also we need to disclose these facts in my financial statement. Then about the compliances with the regulations. So there are Companies Act compliances, there are SEBI compliances, there are accounting standard and Indian accounting standards, which we need to consider while we go for the financial reporting and while we are presenting our financial statement. So here we are, our focus is on the accounting standard and Indian accounting standard compliances. So it's related to impairment of assets, inventory, financial instrument, provisions, borrowing cost, and reassessment of discounting rate. So these aspects we are going. Next is about true and fair view. So our financial statement must present a true and fair view of our results and about our assets and liabilities. So for this, the source of our judgment and estimate and uncertainties must be disclosed clearly. And if there are any impact of any breaches in the terms and conditions of the loans, that need to be disclosed in our financial statement. And next is about explanatory notes. So there are notes attached with the financial statement. So we need to give certain explanation related to my financial performance, my financial position, and my cash flows to my financial statement. And all these are governed by Schedule 3 of the Companies Act. Now proceeding towards important areas which we need to attention for the financial reporting. So first one is about impairment of assets. So first of all, impairment of asset and impairment testing is a regular exercise and need to be done on year-to-year basis every year. And this is not permanent in nature. This is temporary diminution, and it may the diminution may be restated back. So with this, so in our financial statement, there are certain assets and our investment, maybe in our subsidiaries, joint venture and associates. So we need to identify certain indicators that because of COVID-19, is there are any indicator that our assets appearing in our financial statement has been impaired, and if it is the answer to this indicator is yes, then we need to go for the impairment testing. So there may be some example, like in case of the restaurant business, in case of the theater business, and in case of cinema halls, etc., the operation is going to hit in the upcoming years and in the upcoming months. So accordingly, we need to go for the impairment testing. So there is one illustration. Suppose one company is a manufacturing industry, and it's working on its capacity is 1 lakh pieces, and because of the lockdown, the company is able to operate only on 25% capacity in a particular year, and it's not able to recover their fixed cost. Then it is an indicator of the impairment testing, and accordingly, the property, plant and equipment need to be on PPE. We need to account for the impairment loss as per the ICAP. Next is about inventory measurement. So the inventory works like blood in the vein of the manufacturing industry. In most of the manufacturing industry, inventory is the most critical part of the current assets. And it's in the financial reporting, the disclosure is based on my cost or net realizable value, whichever is lower. In the present scenario, as of now, the sales are down, the market is closed, everything is shut down. So how to find out the net realizable values are again a question. So we need to do the same based on certain market market survey, or maybe certain judgment, or maybe our estimation. So based on all these factors, we need to find out the net realizable values of our inventories, and accordingly, if there is a need that we need to reduce the same to the net realizable value below the cost, then we need to take a hit in our profit and loss account. And again, this item is going to hit my financial performance this year. Then the fixed overhead allocation need to be done on the basis of normal capacity of the production, and not on the basis of actual capacity what we utilized. So there is one illustration. Suppose one company is running 2 restaurants, and because of COVID-19, the operation are shut. So as on March 2020, we need to find out the expired and obsolete inventories, and if there are certain item of expired and obsolete nature, then the same need to be write off as an abnormal loss in the statement of profit and loss account. Next is about the borrowing cost. So as per the new recent in most of the cases, the loan installments and interest rate has been suspended for the time being by the concerned bank authorities, and because of this, we need to understand that this is not the waiver. This is only the accrual is still on. So wherever we have certain assets, maybe in case of real estate industries, like my project work in progress is going on, or in other industries there are some other qualifying assets, and we were in the case of capitalizing the borrowing cost to the respective asset. So in all those cases, as the operations are suspended for the time being because of COVID-19, so because of the suspension, we need to charge off, we can't capitalize this borrowing cost to my fixed asset, and we need to charge off this borrowing cost to my profit and loss account as in to my profit and loss statement, instead of the capitalization to the qualifying assets. So again, this item is again going to hit my financial performance during the year. So we need to find out the impact of such kind of cases. So again, the illustration, like due to companies in the operation of real estate and the construction activity, and the company need to identify the suspension period for the year ending maybe 2020 and the 2021, and borrowing costs related to the identified suspended period need to be charged off to the profit and loss account instead of the capitalization. Next is about financial instruments and the fair value measurement. So financial instrument includes my secured loans, unsecured loans, my other payables, and on the asset side, my trade receivable, my other current assets. So all these items need revaluation, need fair value because of this COVID-19 hit. So I'm just hitting on one of the area like trade receivable. So because of COVID-19, the recoverability of my trade receivable is in big question. So we are not sure how much we are going to recover, maybe 80, maybe 90, or maybe 70, or maybe 60. So it depends upon industry to industry and case to case and fact to fact. So in all these cases, the company need to reassess their ECL, expected credit loss, and accordingly we need to do the impairment on these financial instruments or these financial assets. So considering this aspect, we need to take a hit again. Because of these revaluation or reassessment, the hit is again going to be to my financial performances this year. So any loan repayment, holiday or moratorium also need to be taken into consideration. For Ind AS, Indian Accounting Standard compliant companies, the fair valuation measurement is provided under 113. And in case of accounting standard compliant companies, if we have trade receivable, then they are governed by accounting standard 4, and we need to follow the procedure as prescribed under the accounting standard 4. So that we say normally the provisions for the bad and doubtful debts. So we need to increase our provisions for the bad and doubtful debts. Next is about provisions, contingent liabilities, and contingent assets. So considering the present situation, there may be questions on the employee contracts, there may be dispute with the customers, and somewhere we have, suppose in our contract, the force majeure clause, and that's not workable as of now. So these kind of scenario may come into picture. And now keeping in view the current scenario, we need to identify contract to contract basis. Is there are some onerous contracts, is we are going to incur losses from imposition of penalty on delayed supplies, or maybe there may be we need some provision for restructuring cost which we need to be recognized. So because of these aspects, we need to make provisions, we need to provide for the provisions, and if required, if no provisions is required and we need a suitable disclosure through contingent liability, then the same need to be done. There may be vice versa situation that we are in the process of receiving certain insurance claim because of COVID-19. Then also we need to be careful that the same need to be accounted for only when there are virtual certainty about the recoveries. Next is about post balance sheet events. So everyone is aware that our financial year ends on March 2020, and the sign off of the balance sheet and board meeting normally happens after 3, 4, or 5 months. And in between, there may be certain event may happen, which may be my adjusting event or non-adjusting event to my financial reporting, which we are presenting as at March 2020. Like in our this case also, because inventory, there are impairment indicators, there are other events which we need to consider based on fact to fact whether these are adjusting or non-adjusting, and accordingly we need to take hit of the same in our financial reporting, and adjustment will be done on the asset and liability sides both. Next is about revenue recognition and revenue from contract with customers. So revenue, there may be practical cases like we at March 31st, we have some outstanding advances received from our customer and we are not able to honor our commitment. So in that case, there may be sales return, there may be volume discount, and there may be other factors. So considering all these factors, we need to be careful while recognizing our revenue on March 2020. And this we need to disclose the information while we are if we are in the Indian Accounting Standard 115 compliant to understand the nature, amount, timing, and uncertainties of the cash flows. And we also need to assess the postponement of revenue recognition, whether it is required or not, and disclosure of those circumstances as per Accounting Standard 9 need to be given. Then about income tax. So now because of the COVID-19, again, we are not sure how fast we are going to make the profit and how much profit we are going to make in the future, and whether we will be able to adjust our brought forward, carry forward losses. And if the adjustment is questionable and there is a question on our estimate on this, then we need to restate our deferred tax assets in our financial statement. Then about leases. So it may be both ways. So it might be I am the receiver of the revenue on account of leases, or it might be my expenses in my profit and loss statement. So I need to be careful that and need to be take impact for any holiday period provided to me, any moratorium, any concession in the lease and or the rental payments, or any deferment, etc. So considering these aspects, I need to recognize either as revenue or an expense. And obviously discount rate need to be adjusted by any risk of the COVID-19. And we need to also consider onerous lease arrangement to be assessed and accounted for. So onerous lease arrangement may be my lock-in period and considering whether to cancel or whether not to cancel. So like this, I need to take consideration of the onerous lease agreements. Lastly, about the market news on the disclosure. So recently on April, in April 2020, Wipro and Infosys has published their results. So what we all talking about that we need to disclose the impact of COVID-19 in our financial statement. So these blue chip company have given the impact about the COVID-19 impact in their financial statement. So it's about like estimation uncertainty relating to the global health pandemic on COVID-19. So about the assessment of recoverability of my receivables and my unbilled revenues, my investment in subsidiaries, the management and auditor has just relied upon based on some internal and external information, and the impact there may be future impact because of the COVID-19 and market conditions and other market scenarios. So lastly, for one minute, sustainability and to save earth and to save environment. So for sustainability, please turn your phone into flight mode to save its battery. Use a laptop instead of desktop. Don't throw away your old clothes. Switch to online bills instead of paper bills. And to save earth, cancel your paper bank statement. Use your washing machine only when you have a full load. Don't print things you don't have to. Wash your car on the grass. And to save environment, please use one less napkin a day as it would save billion pounds of space in the landfill. Don't preheat your oven. And lastly, read newspaper through electronic mediums only. Thank you. Namaskar.
So thank you, Sandeep. That was extremely useful. And I'm certain that everybody found that informative. And more importantly, everybody has a number of questions that they would want to ask. You may please, on the top right-hand side of your screen, this is for all attendees, there is a Q&A tab. You can click on the tab, send me a question, and I will try and address it. I've already started receiving some questions while Sandeep was talking. Needless to mention, we will continue with the series of this webinar, as there would be more aspects in detail that need to be discovered in the varying standards that Sandeep touched upon. But from an overall perspective, as a financial expert, I think you as much as us understand and appreciate that the need for judgment and estimation is now going to be far greater than any year before. And this has to be seen in light of I need to prepare, or we need to prepare financial statements which are comparable with previous years and which are comparable with subsequent years. And with changing macroeconomic factors which are uncertain, and more importantly, that can continue to change even after the balance sheet date. My next presenter is our Director of Risk Advisory Services, Mr. Arun Pasricha. Arun has over 12 years of experience in the profession, and he has previously worked with PwC, KPMG, and BMR. His entire professional career has been in the risk advisory space, and his topic for today is risk management, or business process and risk management. In today's environment, all of you will need to reassess your business if you break it up into various processes, order to cash, purchase to pay, inventory management, legal, so on and so forth. And in each process, your assessment of risk will change. And the reason your assessment of risk will change is the way you work will change. Virtual ecosystem, you will have guidelines on social distancing from the MHA and thereafter. You have so on and so forth. So what Arun is going to do today is try and identify how these risks are going to change, how you need to respond to these risks, what that means in terms of your people, in terms of your processes, in terms of your technology, what happens in terms of gig economy, which is largely on using part-time workers, what happens on outsourcing, which is going to be key to cost optimization and rationalization of cost. So he's going to touch upon all this and more. It's a very interesting topic and a very interesting presentation that Arun has put together. So please stay on and keep listening. Thank you. Arun, over to you.
Yeah, thank you so much, Dhruv, and good evening, everyone. So, looking at the current scenario where of the pandemic, where entire business are getting impacted and the entire economy is getting shattered in many ways. So a new kind of risk are emerging. The new kind of threats are emerging to organizations. So having said that, I think it will not be wrong to say that risk management is actually the need of the hour. So, even in our day-to-day life, like every day, the way we live, risk is a part and parcel of our life. We do not jump from a tower without ensuring that we are safe. So, of course, we cannot eliminate the risk completely, but we can have adequate measures in place to prevent and protect ourselves and to respond to those risks. So with this background, let's jump into today's presentation. So, why there is so much impact on businesses at the moment, why there is so much threat to different businesses at the moment, because most of the business were not prepared for this threat. Yeah, so it actually came like a shock to every business, because even as per Gartner's survey, which was recently conducted on business continuity aspect, it was, found out that only 12% of the organizations were actually prepared to meet such kind of an impact of coronavirus. Yeah, imagine only 12%. So 88% companies were not even prepared. So when I say talk about business continuity, at this moment where the entire business is exposed to huge risk, the way to ensure the continuity of the business is by managing the risk. So when I say managing the risk, today we'll be covering these three aspects of managing the risk, which I think every business can take the immediate steps and which is required all the more at the moment. So the first step is about ensuring the risks are mitigated in the backbone of all businesses. So by backbone, I mean it's the people, process, and technology. Secondly, we'll be talking about some of the critical operations, how risk is going to be impacting all these critical functions of any organization. And lastly, very interestingly, about the cost optimization, because cash crunch is somewhere a challenge at the moment with almost every business and organization. So how to ensure the continuity of the business, the organizations can do the cost optimization and savings. So let's go one by one. Let's first talk about the people, process, and technology, because these three factors are common across all the business functions. So with talking about people first, so starting with the scenario of work from home. So this exposes a lot of threat and a lot of challenges to all the organizations. So so when I say about the challenges to all the organization in terms of productivity, in terms of efficiency, there's a huge impact on various organizations. So I think a lot of organizations, the way they can respond to this risk is by having a remote working policy. The policy which will ensure that how the attendance will be marked, how the work will be allocated, how the work will be reviewed by different superiors in the organization. At the same time, having a very important is to have an employee communication plan. At this moment, when there's so much fear in life of employees, so I think having this kind of a communication, close communication with the employees is going to be very crucial. Similarly, the downtime, how are we utilizing the downtime which is there? Maybe we can do a lot of trainings for the for the employees. We can do a lot of SOPs which are required to be built in, can be used to be prepared in this downtime. At the same time, a lot of companies are also, because of the cash crunch, are doing layoffs or pay cuts. So many organizations like Indigo, Make My Trip, KPMG, and all we have been hearing, are doing a lot of layoffs or a furlough policy. So by furlough, I mean a lot of people are going on a sabbatical for some time till the time there's no work for them. So since that is a scenario, in the existing scenario, even if the business gets operated, it is going to bring a lot of changes in the roles and responsibilities of all employees, the goals of the employees. The organization structure may change. In fact, the entire HR policy may change because a lot of new rules need to be brought in place to ensure this kind of a new scenario. Moving towards technology now. So when I say technology, again, in the virtual ecosystem in which we are working, there's a huge limitation on the IT infrastructure. More laptops have to be issued. So all that planning have to be done by the IT department of the company. So another major risk comes in the form of a cyber crime. So to ensuring the data is safe. In the recent study by WEA, they mentioned that the cyber crime is going to be at the peak at this moment. Because understanding that a lot of employees are going to be working from home, so it is not like the corporate environment where they are ensuring the network security. So how we all can follow the cyber hygiene, maybe in terms of having a complex passwords in place, our Wi-Fi is secured, network is secured, firewalls, antiviruses are installed. So those basic steps need to be taken care. In fact, my entire IT policy of the company will have to undergo a change. At the same time, a lot of businesses are also doing automation now. So, I mean, like, for example, Fortis and Apollo recently, they also started with the online patient consultation. Similarly, a couple of companies, they are putting a lot of things now on the ERP, even though they were on the paper and approvals earlier. So, I mean, so let's say purchase approval is now, which was done on a paper, is now brought into ERP system to ensure that people even sitting at home can actually get access and approve those purchases which are needed. So lastly, talking about process. So, you know, not only the existing process are going to change in the short term and the long term, as well, the new processes and the policies might have to be created. A new policies, even on the health and hygiene, remote working policies, business continuity plan will have to be prepared. So with this, I think there is so much on people, process, and technology which has to change. But when I talk about process, I like to just give you one example. Let's take an example about a basic supply chain or a basic P2P process, purchase to procure process. So purchase to payment. So when I talk about the general process, it starts from purchase planning, the vendor identification, requisitioning, ordering, receiving, payments. So when in the current scenario of COVID-19, there's a possibility of the change in inventory planning. So safety stocks will change, the reorder levels will change. At the same time, you know, a lot of authorization might directly go to a purchase committee or a procurement committee. So in certain cases, maybe the approvals will even go to the level 2 for the approval mechanism. The turnaround times may change considering that suppliers are not able to provide us the material due to transport limitation. So, I mean, there is so much which is going to get impacted, I mean, in the entire processes. So that's the first piece on the people, process, and technology, which is very important for business continuity. The second important aspect is about the impact on the critical business functions. How these functions, there is a huge risk and a threat to them, and how as a business we can respond to these functions. So let me start with sales function first. So when I look at sales function, you know, many organizations, this is the biggest issue of losing their sales. Yeah, their revenues are getting reduced because of the impact of COVID-19. In fact, the aviation industry, the tourism, automobile industry, the hospitality industries, I mean, many industries are badly impacted. And as per CAPA, in fact, the aviation industries is going to be losing in this year around $4 billion. I mean, that's huge amount if you look at. So I mean, no business, in fact, is going to be protected. I mean, most of the business are suffering because of this loss in sales. So how can we respond to such challenge? So I think the first company need to look at the demand forecast and how, I mean, the consumer behavior is changing in this new scenario. What is the competitive position at this point of time? Whether the products are even viable, whether the price at which we are selling is even viable. So all those scenarios, I mean, have to be relooked at. Even more important aspect in the sales is to ensure that we do not lose out on our existing customers. So communicating with our existing customer, I think, is a very important to be done. Similarly, we must also renegotiate certain contracts with my customer in terms of payment terms and receiving, giving a credit limit to them, a credit period which we need to give it to them, so to ensure our own business safety and security as well. So, talking about the second function, which is supply chain. So, again, in the month of March last month, like Institute of Supply Chain Management, they conducted a survey and they identified that almost 75% of businesses today in India especially are actually impacted because of the supply chain disruption. So even Fiat, Hyundai, Apple also, I mean, for that matter, who, I mean, they are either importing from China or have the manufacturing in China, are badly impacted. So, to ensure that even like the suppliers with which we are dealing, to ensure even they have a business continuity plan in place so that our own business is not impacted. Our suppliers are able to provide us the material in time. So even some companies are going as far as providing finance to the vendors in terms of like one of the country, Montec, like they did a tie up with the banks as well to provide the bill discounting facilities at a very cheaper interest rate to the vendors. So similarly, I think even when we are onboarding new vendors now, because outsourcing is going to happen, a lot of gig economy where work will be given to freelancers will start happening. So in these situations, I think the way we are evaluating and monitoring our vendors is going to transform. The entire process around that is going to change. Talking again about the supply chain, inventory is a very crucial aspect. And during a lockdown, I think it's very important to understand the existing status of our inventory. Are the goods damaged? Are the goods, expired? Or is a theft which has taken place? The goods in transit, what is the status of them? So understanding, and wherever there is a loss, maybe filing claims, insurance against that is going to be absolutely very crucial. Another important area is operations, where the entire business sustainability is at a doubt, and the entire remodel of the business have to be done. The restructuring of the business have to be done to ensure the business is viable even in the future, and to meet the demands of the changing demands of the customers. In fact, so a lot of companies will also face a challenge about the plant lockdown, so plants closure. So, even there's a risk, even though plants may open at the time, but if the health and hygiene is not followed, there are chances that again this infection is spread in the company and the plant will have to go back to the closure. So how are we following the MHA guidelines? So, MHA issued these guidelines which talks about the decontamination of the office areas and the plant, which talks about the social distancing, about the distance which needs to be maintained, the travel plan for the employees, the transportation and commutation plan for the employees to the office, medical facilities which needs to be provided in the office, and so on. So there's a massive impact which is going to come even on the production, because production plans may change. The machines which were not running because of the lockdown, there's a huge maintenance and the overhauling which will be required for them. So like this, coming to the last function, even finance and account is not an exception. The biggest challenge for the finance and account is going to be taking care of the working capital. So, and identifying the options for the emergency funding which are required. The entire budgets may have to be relooked at some non-essential items might be taken out of the budget. So similarly, because there are so many compliances which are changing, so how we can update our compliance trackers, our accounting policies, our accounting manuals to ensure there are no penalties which are exposed to the company. So similarly, it's a huge gamut of risk and response which is there on some of the critical impact areas. Coming to the last topic in the business continuity, which is cost optimization and savings. So when I think about cost optimization, the first thing is about how I can bring efficiency in my existing processes. Yeah, bringing the best practices in place, re-engineering the complete processes and going into the depth of any process to identify how to bring efficiency, how to reduce any wastage which is there, potential gaps which are possible, leakages which are possible, how we can curb those gaps. So a lot of companies may also renegotiate their contracts with the suppliers. Now the oil price is going down. So how with the transporters, we may renegotiate the prices. So Also, companies may be looking at the controlling the budgets and the expenses. So not only just direct but also indirect expenses. So maybe work from home scenario is also one of the ways companies are thinking about controlling the expenses which are fixed for the office scenario. A lot of non-essential marketing activities people are looking at, ignoring them at the moment and postponing certain expenditure for the future, including some of the capital expenditure. Some of the companies are also renegotiating with the bankers for the interest rate, the charges which are there, and so on. The last is about how we can use innovation and automation in our business operations to bring efficiency and reduce cost. So, because there's so much dependency on people, but how this can, the IT and the digitalization can be like used and leveraged to bring that kind of efficiency in the system. So with this, we come to the end of this particular section. And just the key takeaways before we go is that early response is very critical. Yeah, risk mitigation is not a choice. I mean, it's a mandate at the moment. So how we can make our functions actually functional. Prevention is, of course, better than cure, more even now, not just in terms of health, but also to plan for our business. It's a time of where the survival of the fittest and business continuity plan is a must. So in the end, I would like to leave all of you with one thought by Benjamin Franklin, where he says, if you fail to plan, you are planning to fail. So I think let's just go back and have a very solid business continuity plan and have a very clear risk mitigation measures to ensure my business not only survives, but thrives in the future. Thank you so much. Yeah, back to Dhruv.
Right. Thank you. No, thank you. This was very useful. I think what's important to know that a lot of companies who've even built business continuity plans have not accounted for a pandemic of this nature. Nobody's accounted for social distancing. Nobody's accounted for work from home. Nobody's accounted for outsourcing key processes. Nobody's accounted for this kind of supply chain where there's disruption, where you don't know when cargo will move, when it will come. And you may have multiple jurisdictions, providing you your goods. How do you plan for inventory? How do you plan for sale? And what's your inventory reorder period? The concept of just in time will not exist for a while. Everything will change. So from that perspective, I think the most important aspect of this presentation is you need to plan for how your business will revive. And more importantly, you need to plan for what you will do on day one when the lockdown is removed, and how you will proceed one step at a time from there, whether it's 30% employees who are eligible to step in or 50% who are eligible to step in. What happens if you have multiple states that you're operating in and each state has its own rules and regulations? Who's going to follow those? Where's the process? Where's the SOP? Who's monitoring that SOP so that there is no penalty or lack of compliance which leads to other issues? What happens if we lock down again? What if this is not a V-shaped trajectory or a U-shaped? What if it's a W-shaped trajectory? Have you planned for that? And keeping those risks in mind, we're dovetailing into our next session, which is on financial management and sustainability with my colleague Sapna Jaslani. Sapna is Vice President for Transaction Advisory Services at the company and at our firm. She's been with us for over half a decade. She's a graduate from ISB Hyderabad with more than 10 years of experience in the business of transaction advisory. She has spent a lot of time on helping with M&As, advising on fundraising, both debt and equity, financial management, financial projection, business plans, cash flow statements, and more importantly, monitoring those cash flow statements for some large businesses on an ongoing basis to help them restructure based on dynamic factors. And we are in one of those dynamic factors. So I hand over to Sapna to take this forward, please. Thank you.
Thank you, Dhruv, for the introduction. And I'll also like to thank my fellow colleagues, Arun and Sandeep, who have spoken so elaboratively on financial reporting and risk advisory areas. There is one more area which is looming very strongly on the minds of business leaders and most of the organizations is financial sustainability. And before I share my thoughts on this area, I like to draw some attention to what world leaders, investors are thinking. Berkshire Hathaway, which is one of the leading value investor in the world, who looks into each company and each industry very closely before taking positions in it, is looking at this crisis is looking at this crisis in a very cautious manner. Charlie Munger is a right-hand man of Warren Buffett. He says that this thing is very different. Everybody talks as if they know what's going to happen, and nobody knows what's going to happen, actually. The challenges that have already been spoken and well known now in last 33 days of lockdown are too many and too early to come by. And the pandemic, the recession, the global impact, unprecedented. So handling these unforeseen challenges and estimating their impact would be very difficult. Yes, the impact is global. It is sector agnostic. Certain sectors and industries will be on a life support for some time, and certain others will have to reconfigure, revive, and revitalize their sustenance, their businesses going forward. At this point in time, to be very honest, CEOs have lost their old playbook. They are resetting their playbook for post-COVID world. They are back to what, who, and how problem. They are looking at what's the impact on the economy at large, what's the policy response to the current situation, who in my ecosystem, my business ecosystem are impacted, consumers, customers, workforce, industry at large, and even government for that matter. And how I'm going to handle these challenges who have lined up again, and I can't use the same rule book as I used earlier. My customers need a different response to their changing behavior. I need to bring agility into my system. I need to adopt to new technology. I do not have the same partner ecosystem, and I need to perhaps change to new distribution channels as well. So while CEOs are figuring out their playbook, it is the job of finance heads, CFOs, finance controllers to be with their CEOs to understand how they are contemplating the scenarios and work with them to come up with revised possible unit economics. While they do that, they do have their own challenges in hand. Cash has been always king for CFOs, and it looks like that cash has just been infected by coronavirus. There are huge issues and uncertainties on cash inflows side. The treasury is limited. Markets have given a haircut significantly to our liquid funds parked in the markets. My receivables are uncertain, and then the credit health. Is it credit health of my customer, or is it moral hazard? It is very difficult to judge that. So it will take time for CFOs to figure out the depth of the challenge and materiality. Operational cash flows will be uncertain post-lockdown. It could be negligible, it could be low, or it could be too much for some others, like e-commerce platforms. Funding could be very challenging. Lenders are not taking fresh exposure at this point in time, and you may not know how your existing investors or shareholders can support your companies at this point in time. Some of you might not have explored external funding at all ever in the past. So how are you going to handle that funding challenges? On the cash outflow side, my colleagues have already spoken about a lot of input challenges that will come. So your cost function is changing. And if your cost function is changing, you do not have control on your outflows. Your old contracts are not are in breach, let's say, and you don't know what could be the new possible commercials because you don't know the new normal. And if you don't know the new normal, you don't know whether you want to reset those contracts right now or wait it out. Interest and principal moratorium that has come by a way, but it's not sufficient for sure, because your operating cash flows are not coming by for you to start honoring the interest coverage requirements once again. So to respond to these challenges, CFOs need to adopt their response framework and think about short-term, mid-term, and long-term sustainability of their organizations. Solving liquidity problems for next 30 to 90 days is definitely the priority. Building revised business plan and extensive scenario planning is again very important for 2020. 2020 is critical because if we survive this, we will find out something for years to come by. And then there are certain hard choices, strategic choices that some of us may have to take at this point in time, because those choices could be the only choices for us to revive growth. So let us look into each of these areas one by one. First, of course, talking about the most important and the priority one. We spoke about Berkshire Hathaway. It does have 125 billion cash in hand, but it is not taking any positions right now. Charlie Munger is saying that we are like the captain of a ship when the worst typhoon that's ever happened comes, and we just want to get out of it with a whole lot of liquidity. They're not investing. We are seeing that news has started pouring in. Franklin Templeton winding up 6 debt funds, Air Mauritius filing for bankruptcy, and this is probably just the beginning. CFO, finance controllers, and their respective teams have to work work on this liquidity problem very meticulously and closely. They need to analyze their short-term liquidity position from all sides in the entire financial supply chain. They need to shift from monthly cash flow planning systems to short-term or maybe daily planning systems, because every day is a new response, and one may have better liquidity tomorrow than today. Assess short-term obligations that cannot be deferred and need to be honored right now based on criticality of those obligations. Stress testing your collections will be extremely critical. Do not estimate 100% of your collections coming by so easily. Do a 50 to 75% of haircut on those collections. And while you do all this assessment, it is going to be very difficult, and you will also face the challenges in the assessment itself, because none of us know whether 30 days are sufficient or I need to plan for 60 days, because May 3rd is an estimated day of lockdown lifting. But to be very honest, there are already talks in the market that it is going to May 30th. So addressing it early and planning for liquidity solution early will be very important. If my business is not same, if CEOs are changing their playbook, my business plan definitely cannot be same. And if I have to build a plan, I'm building it for 2020, and I need to see, based on my sector, which type of plan I can build. I would say, travel and hospitality, for example, education abroad, travel, retail, the airlines, all these sectors are currently carving out their survival plan. There is doubt about the longevity of this lockdown, and especially human congregations are not coming by so easily. There are certain industries who will have to take a completely revised view of their operations, even if their demand is intact. Manufacturing, for example, contactless manufacturing will be a big challenge. And we have already heard from our colleagues, from my colleague, that a supply chain is going to be a critical factor. And if certain critical inputs do not come by, what would be your alternate sources of procuring them? Because you definitely need to make your supply chain and value chain moving ahead to get some business back on track. Scenario planning is a must do exercise at this point in time. Founder of Voyo Hotels, Mr. Ritesh Agrawal, while addressing a large audience last week, mentioned that his CFO and his team of experts are spending 50% of the time for scenario planning. They are contemplating V-shaped, U-shaped, and even L-shaped recovery, to be very honest, because of the high level of predictability. While you do your scenario planning, it would be, you'll have a lot of questions in mind. Government advisory is changing every day. And your assumptions will change accordingly every day. So you need to be flexible in planning. Your inputs need to be variable, and you will have to do sensitivity at each stage of scenario planning. Capital allocation strategy. Of course, it's not about capex for expansion, but you need money to be allocated to probably new products or new distribution platforms or new marketing platforms. One of our client, which is a listed client, has already come up with first time, to be very honest, for the first time they've come up with a digital launch plan for one of their products already in the last 30 days. So this speaks about that you need to realign your capital to certain critical ways of how you're going to survive your business going forward. Cost optimization strategies are of course the natural choice and come to finance people very naturally. But just think about cost optimization quite closely. It may not be necessary for us to conserve cash at this point in time. Discuss with your CEOs which functions are extremely important, what would take priority over the other, and accordingly align about cutting cost. Optimize your credit cycles. The cycles which were prevalent pre-COVID are definitely not applicable post-COVID. You will have to work it out along with your customers and vendors, assess what kind of new credit periods can come by going forward in your specific industry. One last thing in planning I would like to recommend to everyone is to start integrating your operational and financial MIS and performing systems. Your digital peers are already prepared for it because they have technology to do this smartly for them. But being brick and mortar business, you will have to come up with a methodology or system in place to respond faster once you are out of lockdown. So integrate your operational and financial performance system so that you are responding faster as each challenge keeps coming your way from an operational side. Once you have built your scenarios, you will have some sense of funding requirement across each scenario, both for short-term and mid-term, over, let's say, for next 365 days. Again, change your framework to think about short-term funding requirement, mid-term funding requirement, and long-term funding requirement across each scenario. For short-term, first priority should be to unlock your cash in your existing financial supply chain. Explore working capital loan from your existing bankers because they are your best bet, and be fast enough to adopt to the emergency lines of credit which are available by the government, by PSU banks, and SIDBI, for example, came up with 15,000 crore of funding support to startups. So please act swiftly to tap into these funding sources to support your working capital. For startups, there are certain venture funds which are venture debt funds which are giving 90 days to 180 days kind of funding support. Of course, they have their own investment structures, but if required, you can explore those options. For midterm, in case you already have debt on your books, of course, your interest coverage ratios are no more prevalent. Your relationship is at stake. Build your relationship with your lenders. They have been your stakeholder, they have been your partner, and they'll continue to be partner for long term. Yes, they are scared to invest, but continuous persistence and resolve can bring back that relationship for you to continue working with them. For long term, please talk to your existing shareholders. They have been your biggest stakeholders always. Do communicate the challenges transparently to your shareholders. Prepare and share your revised business plan with them to instill confidence, and then ask for equity funding support for your survival. And lastly, please start identifying new sources of raising funds. It takes time to identify the right partners, and in this market it is going to be even more difficult. There are sources available, but reaching out to them is a definitely task. So reach out to potential partners to help you explore those funding sources. If after you have looked into your scenarios, you will be able to determine what kind of strategic choices you need to make for your long term. For certain companies, if the crisis is too large and you do not have an adequate runway, you may have to go for hard choices of either going for merger or exploring selling non-core businesses or non-core departments in your organization. There are already transactions happening. We heard about a family Ghai family, for example, sold their stake in one of their non-core businesses to cash, and probably they must be using it to save their hospitality business. There is already news about Eros having gone and announced a merger with STX in US. There are investors at this point in time who are looking at opportunities. Facebook did announce its investment in Geo. Haldiram did announce its investment in ATOP at this time of crisis. And there are companies which are taking bolder moves of organic expansion as well. Take the example of Moglix. They are a B2B industrial marketplace and supply PPE. They have announced their expansion to European and American market to build those market relationships, and in this time of the very need for such industrial supply. I'd like to conclude that these all of us and finance functions in organizations need to act now for financial sustainability. The challenges are too many, and this is a timeline battle. There is limited cash buffer, and on the other hand, we have varied financial demands required to revive our companies. So assess your liquidity meticulously, build multiple scenarios, access all possible funding sources, and stay open to strategic opportunities and options around you. Before I close, I'll just like to talk about a sustainability request from our next generation, which is loud and clear to us, and all of us know that they are requesting us to prevent climate change for their sake. So let us all use this crisis as a reason and maybe an inspiration to make our world better. Let's invest and adopt to renewable energy systems, energy efficiency, and electric mobility. This is the time. These are the industries of future. So let us think seriously about them now. Thank you. Over to you, Dhruv.
No, thank you very much, Sapna. Again, super useful. Just to close the sustainability aspect, I think what Sapna's trying to say is that you should evaluate these sustainable opportunities as your new business opportunities to diversify if you're looking to allocate capital going forward. And it is something to be mulled over. So we've given, I hope we've given everybody a lot of food for thought today. It's been quite interesting. We've moved from financial reporting to risk management to financial management and sustainability. Just to try and sum it up, I did say in the beginning, act now and act fast. But I also would like to say that you may hasten, but hasten slowly. It's one of my favorite terms. So every step you take, as fast as you may like to move slowly. Think it through, plan it through, use your advisors. And as Winston Churchill said, never let a crisis go to waste. And my sincere request is, do not let this crisis go to waste. It's a good time to look within. It's a good time to reassess, reimagine, and to implement something which is stronger and leaner and more consolidated to take on the opportunities of the future. So thank you for listening in. We have a lot of questions that came into us. We've tried to answer a few. Sandeep answered a few. I am short of time, as always, in a webinar, but you've all been very patient listeners, so thank you. And I'm going to try and address just a couple of quick questions. If you have any additional questions, you may write to us. You have all our email addresses. Please copy me in every one of them, and I will try my best along with my colleagues to respond to you. The first question is just for Sandeep. You and I have been answering questions live, so you and I'll stay out of it in terms of the statutory audit aspect of it because of shortage of time. Arun, this one's for you. So a business continuity plan that you referred to, somebody's saying, do small and medium businesses need to adopt a business continuity plan? And what are the key aspects of a business continuity plan that you would consider as an expert?
So rather, I feel the business continuity plan is even more important for MSME and SME sector, because we think only for the large corporates and the organization would require such kind of a plan. But I really feel that it is even more required for the smaller organization, because they are the one whose sustainability is at the biggest question mark at the moment. So, and coming to the components of business continuity, just to understand, I think broadly, if I have to talk, we can give it into two categories. One, to understand the analysis, the current impact. So when I say analysis, I mean three kind of analysis. One is the impact analysis the company will have to do. By impact analysis means the impact on their key functions, impact on their people, process, technology, because that will have an impact on the business sustainability and continuity. So the second is about the threat analysis. So what are the different threats or the risk or the new emerging risk which the company is exposed to? So analyzing those is another very important and paramount. Third is about the impact scenarios. So there are various scenarios which will emerge going forward, that this happens in the market, if this is the consumer behavior, this is the way our business is going to respond. So as a business leaders, I think we'll have to understand various scenarios, prioritize the controls we want to build around that, and have even a plan A, plan B in place. So in case if this doesn't work, this is something which needs to be done. So that's the one aspect. The other aspect is about defining the control mechanism to mitigate this impact. So in control mechanism, I'll of course be identifying the way I want to respond to each of those scenarios. Plus, when this scenario happens, who's the one who's going to take the responsibility? So defining the responsibility, defining the timelines is another very crucial aspect of the business continuity plan. Yeah, that's it.
No, thank you. I think that should suffice. And I repeat, if there are any additional questions or follow-on questions, please do write to us. Sapna, again, my second and unfortunately last question is for you. What is the difference between scenario analysis and sensitivity analysis? And how would you and how have you gone about it for your clients till now? That was another question I received.
So scenario planning and sensitivity planning are two different things. In our ways how we deal with our clients, we suggest them to look into macroeconomic factors, macroeconomic growth rates to plan their scenario. So one can look at U-shaped, V-shaped, W or L-shaped market revival, depending upon which industry they are in, as their scenarios. And under each such scenario, you can contemplate key variables and sensitivize them on their availability, on their costing, and how they are going to give the final positive unit economics to you. So that's the basic difference.
Yeah, no, fair enough. So thank you everyone for joining us. And thank you for your time. And all I can say is stay safe, stay healthy, as has been said many a time, but not enough. And most important, please stay positive, think positive, and good things will happen. We look forward to seeing you again at our next webinar. We will announce that very soon. There will be follow-on topics to this. There are interesting topics to come up on direct tax, on M&A tax, on GST. Each is a task in itself, and it makes for very interesting conversations, and we hope to make it interactive. If you have any suggestions on how we can improve this, please let us know. We're completely out of time. Thank you so much and take care. Goodbye.
Bye. Thank you.